Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. It is day 3 of Consensus by CoinDesk. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn and Emily Parker will join us at 11. Good morning, Lawrence, just you and me.
Yeah, just us. And those cool graphics in the morning, for this whole week, the cool consensus graphics, it's like that really feels like being in a spaceship.
It's just a special week. All right, so checking in on Bitcoin. Earlier, we saw Bitcoin break $40,000. Now it's back down to $39,700 on the CoinDesk Bitcoin price XBX. And taking a look at ETH. The CoinDesk Ether price, ETX index right now, 2812. ETH is shooting up 15.3%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So, Lawrence, it's been a fun consensus. We also are seeing the markets pop. Polygon also is soaring ahead.
Indeed. Up 40% today.
Wow.
Mark Cuban talking to CoinDesk saying that he's not just an investor, he's also a user. And its token is up about 10,000%, really like 9,535% year to date.
Incredible.
Yeah, it's had a really good run, and with Cuban on board, it's shot up even more. And then, of course, yes, Bitcoin.
If people want to also learn more about Polygon, they have a foundations track coming up at 8 a.m. They're also going to be exploring CBDCs on that exploration track, but Bitcoin also popping up.
Popped up, yeah, indeed. By the way, with Polygon, log in early because I think with everything happening today, everybody's going to want to watch that. But yeah, Bitcoin up above 40,000 briefly. That's on that whole consortium, not a consortium group that of North American miners who are who met with Michael Saylor and Elon Musk the other day. Yeah. And people are, Michael Saylor had a lot to say about it yesterday on Consensus.
We actually have a clip. Let's play it.
What surprised me is that we've had a nonstop avalanche of good news. David Rubenstein, who's Jerome Powell's famous boss, endorses crypto. Larry Summers, the Secretary of the Treasury, endorses crypto. Goldman Sachs declares, they endorse Bitcoin, right? They're saying that this is a new asset class. Ray Dalio says he'd rather own Bitcoin than bonds, right? Coinbase comes public. An avalanche of really good news. And then I see the volatility in the market all based upon FUD. And the FUD is, first it was the Chinese are mining too much Bitcoin. And then the FUD was sell Bitcoin. And the second FUD was the Chinese are going to stop mining Bitcoin, sell Bitcoin. And then the FUD was, well, you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, the Chinese reiterated you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, IRS says you got to pay your taxes, sell Bitcoin.
And Volk, just a reminder, FUD is fear, uncertainty, and doubt, but staying very positive on Bitcoin on all the good news. And you spoke about the consortium. He mentioned that he had a meeting with Elon and Bitcoin miners. If it was a secret meeting, he wouldn't have told Twitter about it. So Michael Saylor is staying pretty positive, Lawrence.
Not surprisingly, because that's a huge part of his balance sheet now is Bitcoin. He borrowed a lot of money. He went into the market and bought Bitcoin, as he said on our program, that he was borrowing at close to 0% and buying a lot of Bitcoin, and that helped boost his stock price up tremendously. And of course, he's a big believer in Bitcoin.
He has a reason to believe in Bitcoin, and he is definitely one of the chief evangelists of the cryptocurrency.
Yeah. But his shareholders hope so.
And throughout the conference, we'll be getting more keynotes. Today, Larry Summers is speaking. Very excited about that. I'll be monitoring Yeah, I'll be moderating a panel with MasterCard and Gemini. Gradually, then suddenly, crypto financial products for the masses. Check it out at 4:30. They also have new loyalty cards out where you can earn crypto. So there's a huge waiting list for that. Very much looking forward to that talk. And
and I think the Larry Summers discussion as well, as you brought up, that's going to be fascinating. Joe Weisenthal is going to be in on it with him. Joe is a very smart guy who's always been into crypto. So it's going to be a really interesting discussion. I can't wait for that.
Jam-packed day. All right, but we have our first guest here on First Mover, bright and early. Facebook-backed currency Diem recently announced they would be scaling back on their global ambitions and launching a US dollar stablecoin. Joining us now is Diem co-creator Christian Catalini, who is also the chief economist of the Diem's Association. Welcome to the show, Christian.
Thank you, and good morning.
Good morning. All right, Christian, Libra came out really strong with Mark Zuckerberg, Facebook-led consortium of big corporates that we all knew. And, now they've scaled back and now they've rebranded themselves as Diem. Would love to get an update on the status of the project right now.
Yeah, so, as I mentioned before, I think our first version of the white paper was extremely naive. And so starting from that first document, I think we've been extensively engaging with regulators across the globe. And as part of that, our project has evolved on a number of dimensions. So you may have noticed that we've added additional controls to protect consumers, additional controls to combat financial crime on the network. And so the entire project has developed and evolved to really meet what we think the regulators will expect from any project at scale in the next few years.
Mm-hmm. Now, go ahead, Lawrence.
Oh, I was gonna ask you the whole idea behind Libra. First of all, good morning. The whole idea behind Libra was that it was a basket of currencies, that essentially a stablecoin that was backed by a basket of currencies. Is that now going to be walked away from with Diem?
Yeah, so, with white paper 2, we already kind of, described our intention of moving away from the basket currency and starting with single currency stable coins. To some extent, the mission and vision is exactly the same. We had designed the basket currency for cross-border use cases, and we believe that we can support many of those use cases also with single currency stable coins. That transition was really driven by, again, conversations with regulators, concerns about interference with macroeconomic policy, and also ensuring that we have a robust design that can scale, not just in developed countries, but also in emerging economies.
Christian,
so you've moved from. Well, I was going to ask that you have moved from California to California from Switzerland. Was that part of the whole walk away from the basket idea? And is Facebook going to be more in control of this going forward rather than it being a consortium?
No, so, if anything, the Diem Association is an independent organization with 26 members. Facebook is only one of them with the equal voting power like everybody else. The move from Switzerland to the United States really reflects our new strategic shift. There's been an evolving regulatory environment in the United States. And so as part of that, it made a lot of sense, especially since we're starting with the Diem dollar, to really move everything to the United States. And under that regime, the FINMA license is not going to be required anymore. So we've withdrawn our license application.
So, Christian, earlier this week during Consensus, Federal Reserve Governor Lael Brainard spoke to CoinDesk about private stablecoins versus public stablecoins and linked it to the early days of America. We actually have a clip. Let's have a listen.
If stablecoins were to be widely adopted and served as the basis of an alternative payment system oriented around new private forms of money, there's a real risk that you could see fragmentation of the payment system and that you could see consumer protection and financial stability risks because of the risk of run-like behavior. And so I would just hearken back to that period, the free banking era in US history, when the inefficiency, the fraud, the instability in the payment system that was associated with active competition among issuers of private paper banknotes led to what eventually was a uniform form of money backed by the national government. So that is, I think, a prominent consideration as we think about a system oriented around private money and a digital payment system oriented around what is essentially public money.
So, Christian, listening to Governor Brainard, she discussed concerns about private issuers, and a proliferation of such issuers could get pretty messy. She harkened back to the time in early America when private banks would print dollars based on their own reserves. Are these concerns that you share?
So I want to say that we strongly agree with Governor Brainard. And in fact, what we're advocating for is different. I think she's absolutely right. When you look at the stablecoin landscape today, many things are called stablecoin, but that's a little bit of a misnomer. When you look under the hood at what the kind of the stability requirements are, the economic design, and how many of these stablecoins today would perform under market stress, I think she's right to connecting them back to the period of wildcat banking. We don't have consumer protection standards that are up to par for what we're really suggesting, which should be more of a public-private partnership. We see this almost as a retrofitting exercise, as a temporary exercise where issuers such as Silvergate in collaboration with Diem will be issuing a Diem dollar. But the moment there is a CBDC, we are the only stablecoin project, to my knowledge, that has committed publicly to phasing out our own token and replacing it with the CBDC token. The main reason being that we do believe that there's a strong complementarity with what Governor Brainard and, of course, the Fed can do in terms of providing stability, providing reliability of the coin, and private sector participants such as Diem in terms of how can they get that token to be used by businesses, by merchants, by consumers in retail transactions, so that you first of all get faster time to market. And also you get really the benefits of both private sector efforts that can really work in customizing those use cases and driving adoption. And of course, the public sector role, which is super important in ensuring macroeconomic stability.
Christian, I wonder if the technology, though, can come to a point where currencies can just be easily made, just as easily as web pages can be made today. What do you think of this prospect of a proliferation of private currencies, and which one will win?
I think we need to draw a distinction between, what's happening in the cryptocurrency space in terms of new types of digital assets. All those digital assets make different choices. Economists tend to think about it in terms of market design. These are different trade-offs in what those currencies really achieve. When we're thinking about medium of exchange, our belief is that building on the fiat rails is really the way forward. What we're trying to do is really reduce fragmentation in payments and in financial applications by taking fiat and really trying to digitize it in the best way possible.
So do you see the potentially the Diem project being nationalized, so to speak, where you provide the technology for the Federal Reserve, let's say, to issue a CBDC, and ultimately stepping back, a separate question but kind of related, is how do you see this affecting international monetary policy? Is it going to change the role of the dollar as a reserve currency at all? Will these CBDCs do so, or will cryptocurrency in general do so? How do you see that playing out over the next 5 to 10 years?
Yeah, so I want to clarify that we don't see ourselves replacing the role of the public sector. So if you think about different layers of the stack, a CBDC would be kind of the bottom core layer, and the public sector can play an incredibly important role in ensuring the stability and reliability of that layer. Where Diem comes into the picture is on top of that layer. So think of it as a payment network that enables new use cases and applications on top of what the public sector will deploy in the long run. So network focused on payments that will, for example, allow merchants and businesses to use this to accept payments in the same way they do today on slower and higher cost rails. When it comes to macroeconomic policy, again, we made it really clear that we want to work together with central banks and really find solutions that do not interfere with local macroprudential rules and regulations. Even in countries where, you could imagine people trying to move from their local currency to a Diem dollar as a store of value, the design of our network is really, meant to mitigate the risk of currency substitution. Now,
Christian,
you hear often. Yeah.
I'm just wondering, the project started off as a solution for the unbanked worldwide. Has that also pivoted? Is the unbanked still at the core of your strategy?
So expanding financial inclusion is absolutely at the core of our strategy. That said, it's going to take us some time. When you look at unbanked and underbanked, whether it's in the US or even abroad, the critical junction is the last mile. How do you reach that user? And especially, how do you enforce really robust financial crime controls? That will have to work over time through development of better identity standards. If you do not have a better identity standard, it's very difficult to separate, a good user from a bad actor. And so our work is going to take, multiple years probably to unfold, because that gap at the endpoint, it's one that is difficult to solve even for a project like Diem.
Yeah, well, inventing a new currency certainly is a complicated development, but we're looking forward to tracking your progress. Thank you so much, Christian, for joining us.
Thank you. It was a pleasure.
All right, that was Diem co-creator Christian Catalini. He'll be speaking to Michael Casey and Sheila Warren on their special consensus edition of Money Reimagined later this morning. Coming up, we will take a look at the markets with Satstreet Vice President Michael Nasser. Time for our live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently at $39,550. Bitcoin is up almost 7% over the past 24 hours, and the CoinDesk Ether price ETX index right now at 28.18. ETH soaring almost 15% over the past 24 hours. And joining us now to discuss the crypto markets is Satstreet co-founder and vice president Michael Nasser. Welcome to the show, Michael.
Yeah, thank you for having me.
To have you. Nice shirt. So Bitcoin is slowly recovering from last week's sell-off. When do you think we'll see a rebound back to the $50,000 and $60,000 levels of just a few weeks ago? Is that imminent, or are we in for a deeper bear market?
Yeah, that's the big question right now. It's really interesting to take a look at this last pullback in relation to previous pullbacks, as it appears this one had a nice rebound off the bottom end of where we saw it potentially going down to. So, I mean, look, if I knew exactly where price action would go, I'd probably be in a nicer
what kind of
destination
metrics
right
are you
now.
Looking at that may inform you of the direction?
Yeah, I mean, we look at running an OTC desk, right? We get to see a lot of what sort of the institutional players and the bigger whale type clients or investors are doing. And we can certainly say with confidence that we were certainly net buyers at our desk, which is a really good sign. I think a lot of folks got into this rally in a really big way, coming up around the 25K to the 30K mark, when you saw a lot of institutional type clients piling in. And I mean, Elon sort of spooked the market with his ESG concerns. I mean, ESG concerns across all different financial markets are really loud right now. And I think a lot of folks probably sat there and thought, you know what, it's maybe time to take some profits off the table, wait to see how this whole thing shakes out. So I think there's a lot of support around that, 25K to 30K range, which we did see. And I based on, what we're seeing right now at the desk, lots of clients are sort of in this mode where they're waiting with cash on the sidelines, waiting to see which way this way breaks out.
So, Michael, do you think that they were this whole non-consortium mining consortium? Is the market just kind of like grasping at any headline, looking for a reason to either buy or sell it, or are there legitimate concerns? In other words, are these deep-seated moves or deep-held opinions by the people who are either buying or selling, or is this sort of like just flipping through the headlines and taking short-term positions?
Yeah, I mean, we've seen this over and over again. I've been running OTC desks for the better part of 4 years now, and every time Bitcoin goes on a really great run, it almost looks like you get to a point where the market may be teetering at an overbought position, and really anything could take down the market with just the news headline. And then what you see is just FUD on top of FUD on top of FUD coming all in at once. And I think the ESG concerns from Elon Musk certainly tilted that in the downward direction.
Kind of echoes a lot of what Michael Saylor was saying, but I was also reading your newsletter, and it mentioned investors are hesitating or at least expressing concerns about BTC for its environmental impact. How do those conversations go, and are they asking for clean Bitcoin, so-called clean Bitcoin? Is that even possible?
Yeah, we work with a lot of the miners in Canada. That's sort of been our wheelhouse over the many years, and we had a couple of clients actually in that mining council meeting. So it's great to see that the mining space is thinking green energy, but I can tell you wholeheartedly that all of our mining clients are using clean energy to mine their coins. So over the years, we have had points where more institutional investors were looking for green Bitcoin, or miners that were mining green Bitcoin were looking for a premium on the coins that they were selling. But we haven't really seen real appetite there. We've heard it from a few folks, but it's not something that we think about all that often.
So, Michael, from your position, who's actually doing any buying and who's doing? I mean, you said you deal a lot with miners. Are they selling? Who's doing the selling? Who's doing the buying right now, from your perspective?
Yeah, for the first time in my career, just late last year and early this year, miners were buyers. And at the beginning of our desk at Satstreet, we've only been around for 11 months. We've done some pretty serious volume, especially being in Canada. We're coming up to 400 million right now. At the beginning, naturally, we had a lot of miners selling through us. And as the narrative sort of switched with institutional adoption led by the Michael Saylors of this world, the miners, flip-flopped over from selling to being actually buyers and building up their treasury to be more of like a Bitcoin pure play. So we had not sold a Bitcoin for a miner for about 6 months to the start of the year, and instead, we were really happy to see miners following the likes of Mara and being net purchasers of Bitcoin in really big ways. So it was really good for our business, and honestly, just really great to see, from a whole industry standpoint. And I was a little concerned that on this last pullback, that we would see miners sort of capitulate and start selling their coins. But we did not see that happen. And I think that's a really, really great sign.
A very interesting signal. Didn't know miners were buying Bitcoin. Thank you, Michael, for joining us and sharing with us some of your data. All right, that was Satstreet. That was Satstreet co-founder and vice president Michael Nasser. Meanwhile, SpaceChain is launching commercial blockchain tech into space. The decentralized infrastructure provider will participate in 2 missions scheduled for June aboard SpaceX Falcon 9 rocket, sending an Ethereum node, Bitcoin nodes, and the teachings of the Quran into space. Joining us now to discuss is SpaceChain CEO Zee Zheng. Welcome, Zee.
Hi, I'm happy to participate, and it was a very interesting conversation you just had there.
Yeah, absolutely. Well, but what you're doing is also equally incredible. Perhaps you can explain in your own words your mission here, and how do you choose what goes up into space?
We started our company in 2017 with my co-founder, Jeff Garza, who was a third ever Bitcoin developer, one of the Bitcoin core developers. So we actually really started with integrating Bitcoin and another project, Qtum, which is also our partner. Then we come to a stage, then it's getting more mature, our technology getting more mature, and we want to interact with a more open source developer and with we look at the field, and Ethereum now the most sophisticated ecosystem at this moment. So we work with Ethereum, and now we're looking for what's next.
Yeah, you're launching Ethereum and Bitcoin nodes into space, and that's being done for security purposes. Can you go a bit into that? Tell our audience, explain why this is necessary.
For sure. So we did our Bitcoin launch at the end of 2019, and now we're launching our second generation. So what we're doing is that we're keeping launching our Bitcoin wallet payloads into the International Space Station. So it will be installed by astronaut. Then inside the ISS, then it will play a function that it will keep our private key with our multi-signature design for our clients. So basically, for our clients, they have a multiple signature infrastructure that has one of the key inside of the ISS, then can be this security place for them to make transactions. So think of a situation that if we're hackers or to breach your ground network, or if there's a potential hacking of your and any other system, will be this independent controller of the private key to keep our customers' money safe.
So you have to basically have astronauts go in and service this. Is that it for the second key? I mean, they're going to have to sit there and start dealing with that.
So that's how the installation process goes. So basically, we joined. So what happens to the International Space Station is that they have regular resupply missions. So we basically joined our supply mission, and we'll join another one next month. That send it to. So we have hardware sent it to the astronauts, and so they will spend some time actually installing inside the ISS. So basically, on the communication wise, we'll be able to share the bandwidth of ISS.
So with that, I mean, there's usually a massive delay transmitting data to and from space, and there's also like with GPSs, there's a gravitational time dilation, and so you're actually out of it in a different time. How does that affect having a node in space?
Yeah, very, very good point you just mentioned there. So because we're mainly working with enterprise customers, so our main customers are digital banks, custodian services. So we're talking about their average transaction size is actually rather big, and they care of security more than the speed actually for per transactions. So actually, sometimes being slow is an advantage, because we have observed some cases that when the hacker wants hack into the system, they want to transfer the money out as fast as possible. However, we work at the backwards, so we can actually slow down the transaction because delays. And also another factor we can add into the industrial the process design is that we can say, unless ISS pass through the certain ground station for 10 orbits, the transaction won't go out. So we actually give an extra buff time for our customer to react to any kind of potential breach.
So is this actually basically a bank in space? And are you anticipating some sort of interplanetary species and anticipating that kind of future?
So in a future perspective, this is also a common topic inside of the company, is that we say, if we actually move to Mars, then what kind of money we're going to use, right? For based on the consensus of the people, then I'm not sure. Yeah, that's a possibility.
So this is a SpaceX. You guys are working with SpaceX, and I didn't see the word Doge in anything you guys are doing.
So for us, we care about our customer, and currently we're working with Bitcoin and Ethereum. We haven't touched Doge yet, and we're interested, but we haven't made a move.
Musk hasn't gotten on the phone with you yet?
Not yet. We basically on board. Yes.
Just
tell him you're mining in space. Maybe he'll call you.
Zee, thank you so much for. We've got to wrap it there, but Zee, thank you so much for joining us this morning. Really looking forward to all these payloads into space and the developments of that colony, or that settlement in space that you're creating.
Okay, thank you so much.
All right, that was SpaceChain CEO Zee Zheng. He'll join a panel at 6 p.m. tonight during Consensus by CoinDesk to explore the intersection between space and crypto. You'd like to attend head on over to events.coindesk.com, and that's it for this early edition of First Mover Part 1. We'll be back for a special consensus edition of First Mover at 11 a.m. Eastern. You'll want to check out today's amazing keynotes at Consensus. Former Treasury Secretary Lawrence Summers, Executive Editor of News for Bloomberg Digital Joe Weisenthal, and CEO of DBS Piyush Gupta. Thank you, Lawrence. Lewitinn, Managing Editor of Global Capital Markets. I'm Christine Lee. Coming up next is Money Reimagined live from Consensus. Stick around. You're watching CoinDesk TV.